Hi everyone, welcome back to Corporate Decoder, the place where we, let's just say, try to make the impenetrable a bit more penetrable and perhaps find out why the company's funds are going on a summer vacation. I'm kidding, kind of. In this video, we're diving into Virtus Alternative Solutions Trust's recent filing. It's packed with info about their fund's performance, costs, and where they're investing. We'll break down what all those numbers mean for you. Before we get started, if you appreciate these deep dives into corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, so come join the conversation. First off, this is a semi-annual report sharing how things are going with the company's funds, so shareholders stay up to date. The report covers the 6 months from November of last year to the end of April of this year. Let's talk about costs. This is something very important for investors. It's the costs, which means the money you pay as a shareholder for the fund to be managed. A key stat here is the cost percentage based on our hypothetical $10,000 investment. For the Virtus, Duff & Phelps Select MLP and Energy Fund Class A, it's 71 TOSF at $10 or 150%. Class C is a bit more expensive at 10 VADALAN or in 15%. Class I is cheaper, costing $58 or 150%. Class C is a bit more expensive at 10 VAS I is cheaper, costing $58. Or $9, which translates to 2 to 15, or 1 fund 50%. The fund's net assets are at roughly $54 million. They also have 28 portfolio turnover rate is at 25%, which means that a quarter of the fund's holdings were replaced by other ones in that semester. How do they allocate the assets? 98% is in common stocks and MLP interests, followed by diversified at 39% and natural gas pipelines at 20%. The Virtus Car Long Short Equity Fund is a different beast. For Class A, the costs are $107 or 224%. This fund holds rugby $53 million. It currently has 39 holdings and its portfolio turnover rate as of the end of semester, if at 10%, which, if you remember, is far less than the other fund, which was at 25%. Where is this fund investing? Well, 120% in common stocks that are split into financials at 42%, industrials at 25%, and information technology at just 15%. They are also short selling, which represents 20%, mostly split between industrials, which are at 6%, and consumer discretionary, which is also at 6%. This is important. The Board of Trustees approved a plan of liquidation for the Car Long Short Equity Fund, meaning it's going to be shut down and it will be liquidated on July 25 of this year. It does sound like the funds will end their journey this summer. Now let's dive into the actual numbers, the financial statements with assets, liabilities, income, and all that jazz. 200 Duff & Phelps Select MLP and Energy Fund clocked in at about $54.2 million, while the Car Long Short Equity Fund had $52 million. The interesting thing is that the Long Short Equity Fund also held short positions against other companies, which ended subtracting from the fund's assets. Both funds had cash. The Duff & Phelps came with $903,000, while Car Long Short Equity did a bit better at $1 million of cash. Going back to the short equity fund, its securities sold short were worth roughly $8.7 million. So what do they owe? Not much, roughly $1 million, while Car Short Equity owes about roughly $8 million. For the Class A shares, they are worth $16.18 for Duff and $16.10 for Car. Moving on to the statements of operations, is Duff received $62,000 of investment income, while Car received only about $24,000. After less expenses, the investment income is only at $357,000 for Duff and a lease of $57,000 for Car. After unrealized of $3.737,000 for Car. After unrealized of $3.7 million of $3.7 million decrease in net assets resulting from operations is $976,000 for Duff and a lease of $3.7 million for Car. Here's where we can view how the fund's net assets have changed both in the short last semester and in the long year. Duff's net increase resulting from operations was $1 million against Car's loss of the same $3.7 million. The dividends and distributions to shareholders also ended up affecting this metric. As of the end of the reporting period, Duff had rudely a net asset of $54 million, while Car ended up with about $53 million. Scroll net asset value quit. Beginning of period scroll, the financial highs are also reported comparing 2 semesters of each year. In short, there is nothing too alarming other than seeing net asset values and total return decrease with the car fund, confirming further why the fund is being liquidated soon. This section describes how these funds value their holdings. Equity securities, like common stocks, are usually valued at their closing price on exchanges. However, foreign securities might get tricky if something big happens after their market closes. But before the fund calculates its own value, they estimate or fair value based on similar US traded investments. Illiquid assets and similar private placements are internally fair valued by a committee. Now, the funds use a level system to show how they value assets. Level 1 is straightforward market prices, Level 2 involves observable inputs, and Level 3 uses unobservable inputs, basically internal assumptions. Here's an important part mostly for the Duff Fund because it holds MLPs or Master Limited Partnerships. They get taxed in a different way. They also face market factors and regulatory rules that do not affect common stock. Okay, the company mentions that it may be involved in compliance and legal reviews, but say they don't expect anything major. Here's the final cherry on top of our adventure. On June 3rd of this year, the Board of Trustees approved, as we mentioned before, a plan of liquidation for the Car Long Short Equity Fund to be liquidated around July 25, and which kind of makes sense to talk about if you think it will be liquidated next month. Now let's take a step back and look at the bigger picture. There's a clear contrast in how the two funds are performing. Duff & Phelps seems stable, generating income which might make it an attractive option for shareholders. Meanwhile, there are concerns with the Car Long Short Equity Fund, with its assets draining and now an upcoming liquidation due to performance. But it's not fair to judge only about the financials because they don't tell everything. Maybe Duff is too conservative, missing greater returns to please a more safe profile, and maybe Car had an interesting strategy. There are many details within the report that we can read, check the link below, but given all this, it's easy to understand why the company wants to focus where its products seem to do better as management expects more from Duff. Is there anything notable in it? Well, the long car fund to be liquidated really signals a change of heart, with less bets on riskier strategies and more concentration to high-yield income-producing products. Alright, that's our breakdown of Virtus's latest filing. It's sad to see funds that were on a rough journey this last semester, especially one being liquidated, while it's good to see those performing well. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.